Welcome back to Factful Finance, where we make understanding your money easier and more empowering. Let's dive straight into a topic that impacts so many of us: navigating taxes and deductions as a freelancer. Now, if you've been freelancing for any time, you know that taxes can feel like a maze. But what if I told you that with the right knowledge and tools, you can not only survive tax season, but thrive during it? Before we begin, just a quick reminder, this content is for educational purposes only. While I'll share tools and insights, always consult a professional for personalized advice when it comes to your own taxes and deductions. Okay, let's jump in. If you're a freelancer, you don't have a corporate HR team handling your taxes. That's on you. But the good news? There are many ways to reduce your taxable income through legitimate deductions, allowing you to keep more of what you earn. Let's break this down into simple steps so you're not overwhelmed. Step 1. Track your income and expenses. First things first, if you're not already, you need to track every dollar that comes in and goes out. Apps like QuickBooks Self-Employed or FreshBooks can help you keep your finances organized. Why? Because the IRS requires that you report all your income, whether it's from a client paying you via check, PayPal, or any other method. For example, let's say you're Olivia, a freelance graphic designer. You charge $2,000 for a branding project, and you've also been making $500 a month from online sales of digital templates. That's $2,500 a month in income. If you're not tracking this properly, you could miss some of it when it's time to file taxes, potentially putting you at risk for penalties. Step 2. Deductible business expenses. Now let's get into the good stuff. Deductions. These are the expenses you incur that can reduce your taxable income, meaning you pay taxes on a smaller portion of your earnings. As a freelancer, these expenses are often related to running your business. Let's say you're James, a freelance photographer. Here's a list of common deductions you could claim. Home office. If you have a dedicated workspace at home, you can claim a percentage of your rent, utilities, and other home-related expenses. Equipment. Cameras, lenses, computers, and software are deductible. Internet and phone. If you use these for business, a percentage can be written off. Meals and travel. Business-related meals and travel are deductible, though be careful to keep the receipts and document the purpose. It's important to note here that only expenses that are necessary and directly related to your business qualify, so you can't deduct your groceries just because you're working from home. Keep that in mind when reviewing your expenses. Step 3. Understand the self-employment tax. Freelancers have to deal with self-employment tax. This includes Social Security and Medicare taxes, and it's something that's often overlooked. As a freelancer, you pay both the employer's and the employee's portion, 15.3% in total, as opposed to the 7.65% that traditional employees pay. But here's the silver lining. You can deduct the employer's portion, 7.65% of that self-employment tax when calculating your income. So if you owe $10,000 in self-employment tax, you can reduce your taxable income by the amount that represents the employer portion. That's a big help. Step 4. Retirement contributions. This one is often underutilized by freelancers. Retirement savings. As a freelancer, you have access to special retirement plans like SEP IRAs, solo 401ks, and simple IRAs, which allow you to contribute much higher amounts than you could with a regular 401k. For instance, if you're Noah, a freelance writer, and you open a SEP IRA, you can contribute up to 25% of your net earnings, or $66,000 for 2023, whichever is lower. This not only sets you up for the future, but it also helps lower your taxable income for the year you contribute. Step 5. Consider hiring a tax professional. While tax software can handle most of your filing, there are times when consulting a tax professional is worth the cost, especially if you have multiple income streams, complicated deductions, or you're self-employed in more than one field. Tax professionals can guide you through complex situations and may help you uncover deductions you may have missed. Take Sophia, for example. She's a freelance writer and digital marketer. Sophia has income from both writing articles and running an online course. A tax professional can help her sort through which deductions apply to each income stream ultimately saving her money in the long run. Conclusion: navigating taxes as a freelancer isn't impossible, but it does require attention to detail. Track your income and expenses, take advantage of legitimate deductions, understand your self-employment tax, and consider contributing to retirement plans. Most importantly, don't hesitate to seek professional help when needed. Your future self will thank you. What's the first step you'll take to optimize your taxes as a freelancer? Drop a comment below. I'd love to hear from you. Thanks for tuning in to Factful Finance. If you found this video helpful, why not go ahead and hit that like button? And if you want to stay ahead with more practical, expert-driven content like this, be sure to subscribe and click the bell so you never miss an update. We think you'll find the next video on screen useful to your financial journey. Remember, knowledge is power. Let's keep making those smart financial moves together. See you next time.